Welcome to a Purple Chips FAQ. This is where we answer your questions. I'm John Schwinghamer, the author of Purple Chips, published by John Wiley & Sons and available everywhere. Now, please take a moment to read through our disclaimer so you can pause your screen for this. Thank you very much. Now let's get back to our FAQ. In this FAQ, we answer two very important questions. How do we choose targets? And for this, I will use a couple of examples, the first one being Fastenal, and the second one being Fleur Corp. And the second question, do we ever change the top 25? And the answer is yes. And I'll show you an example of that, a very current example, using Pepsi and Colgate, which were recently changed in the top 25 list. So let's get on to the presentation here, just a moment. So we're going to show you Fastenal and Fleur first. So how do we choose targets? So let's go over to our Thomson 1 screen. And here we have Fastenal, F-A-S-T. And I just want to show you how we arrive at our targets. First of all, in the case of Fastenal, the first thing that we would look at, and I'll show you the situation here. The first thing that we notice is that Fastenal currently trades at 31 times earnings. And you can see that right up here, 31 times earnings. And so what I would do in estimating the valuation range, because Purple Chips is very conservative, and knowing that the market is trading around 15, 16 times earnings, I would want to be fairly conservative in this because I wouldn't want to be buying Fastenal, even though it's an excellent company. I wouldn't want to buy Fastenal at current prices because that's just too high. So I would want to be below the previous valuation range if I ever buy it, because I think there's too much risk. If something goes wrong with a company like this, the valuation could quickly drop to new low levels. And so we wouldn't be buying a company like this unless it was very reasonably priced. And in this case, what I would do is I would look at a figure like 35, for example, and I just moved the EPS line down here, and that would show you that that would be at the historically lowest level that we've seen. And at 35, you would have a 25. You see, I moved the line, and so this actually changed. The current valuation is here, trading at 31 times, and because I moved the line, it's showing me the number at 25, so 25 times earnings. So I would estimate that that could be a reasonable target to be buying this stock at. That would be a new low valuation. Now, in terms of the high valuation, what I've done is I've taken, at a reasonable point, the historical high levels. And what I'm doing is, you can see here, that's a high valuation, high valuation, high valuation there, high valuation here. And so it's no accident I've chosen all the points that are more or less the high valuations over the history of the company. Now over here, this was very unusual, and so we went a lot higher than normal, but I'm going to exclude that. I'm going to say that was an anomaly. So I would say that a high valuation on this stock would start anywhere, based on the current earnings, around 46, 47 or higher. So if I owned this stock, I would say at 46, I would be taking profits on this. And I would not be a buyer unless, like I said before, we actually got down to like this level here, which would be consistent with a lower valuation. Now, let's move on to the next one, Fleur Corp, because it's a little bit of a different situation. So in the case of Fleur Systems, sorry, what we see here, the first thing that I would remark is that you've got a flattening of earnings. Okay, the earnings trend has been pretty flat for about the last 3 years. This is still a purple chip, but it's certainly not a top 25 because it hasn't got the hallmarks of the top 25, which are really steadily earning companies, steadily growing earnings in great companies. This is still a good company, but it's had some flattening of earnings. So what would I be doing in a case like this? Just a minute. What I would be doing is I'd be looking at this earnings line here, and because it's been flattening, I want to be more conservative, and so I would actually say a target of $17 if I was going to buy this stock. Because the earnings have been flattening, the growth is slowing, so I want to be even more cautious. And on the high end, I don't think it'll go as high as it used to go. Like the higher valuation would be somewhere recently, it traded up to this level here, or even this level. back in 2008, but that's not going to happen, not with flattening earnings. So I'm saying that I'm going to take the historical valuation highs, which in this case, I'm taking this period here, and I'm taking in this area here, and I'm being conservative, so I'm going to say that if the stock was anywhere above 28, 29, I would be taking profits. That's only if we owned it. Now, of course, if I was going to buy it, I would only be buying around the 17 mark. So that's how I choose the valuation ranges, which is very important. It's important to understand the logic behind this. And again, look at the PE levels here. The current PE is around 13 times. And if it went up to $29, you'd be looking at a PE of about 20 times. Now, of course, at $17, I'll just show you what that amounts to. I drag the EPS line down there. And now you can see that the PE is actually at around 12 times. So it's pretty conservative, but it makes sense in a situation where you've got very, very flat growth in earnings. So I keep that in mind too. So now let's move on to do we ever change the top 25 stocks? And the answer is yes. We do change them, and this is an example here of Pepsi. Now, Pepsi has an excellent earnings history, but what you've seen recently, and this is why we just excluded it, is you had 3 quarters down in the earnings. Most top 25 stocks never do that, okay? And prior, like in the last at least 12 years, we've never seen that sort of situation. We had a flat earnings growth during the crash in 2008, 2009, but this is the first time we've seen this sort of event here. So earnings have been declining, not a good sign, and this no longer qualifies as a top 25. So what do? I replace it with a company like Colgate, and I'll show you what Colgate looks like. You see, I've always got the runner-up, okay, in case we take off a top 25. Now, that does change the performance of the model if you look at the performance of the top 25, but very, very slightly, because in this case, I think Pepsi is up about 32%, where Colgate is up 40-something% from its high back in 2007. So it makes a minor difference, so you have to keep that in mind. But this is why we replaced it, because Colgate has very few declines in earnings, okay, in the last few years. They did have a little bit of a drop back here in 2004, 2005, but very, very minor hiccups in their earnings trend. So this is why this is the new top 25. So that's all for today. That concludes today's FAQs. I'm John Schwinghamer, the author of Purple Chips, and thank you for watching.